The US spent $6.13 trillion in 2023, but it only made just under $4.5 trillion, adding to its total debt of about $35 trillion. Now, this debt isn't just increasing, it's accelerating at a dangerous pace. We can see here in the federal debt to GDP ratio year on year, which shows how quickly debt is rising compared to the past, there's a clear trend of each new high usually being higher than the previous. The problem is that this is a cycle that will likely lead to the US losing its global dominance and maybe even war in the future if something doesn't change. But will the US actually collapse? What will happen if it does? How likely is it? And finally, does this present any opportunities for us right now? Let's first understand the basics. The US can't continue the cycle of debt forever. Eventually, most of it will need to be repaid, and the US has 5 options. So let's talk about the first one, which is what if they defaulted on it? This means that they can't pay the investors back, just like you and I not being able to pay back a credit card. This is very bad because it says to the world that the US economy is extremely weak, causing them to move huge amounts of money away from US markets, which would cause a massive market crash. For example, in 2001, Argentina defaulted on $63 billion worth of debt. As a result, their currency collapsed and is worth almost nothing compared to the dollar. To this day, it's still struggling to make a full recovery. However, if this was the US, it would be unimaginably worse because the US is the world's reserve currency. This means it's the most used and most held currency by countries all over the world. So if the US defaulted, it wouldn't just cause the US to fall into financial crisis, but the entire world. But what does this mean for the average person? Well, if the US defaults, we could see skyrocketing inflation. Basic goods like groceries and gas would become massively more expensive. Interest rates could boom, making it much harder to borrow money, which would lead to less spending. That less spending would lead to a surge in unemployment because businesses would struggle with the higher costs and less people spending money. In this environment, the gap between the rich and the poor could widen further. And if we zoom out on a global scale, the loss of confidence in the US dollar could lead to a reorganization of global power, with other countries, most likely China, replacing the US as the world's financial leader. This would likely be one of the most volatile times we'll ever see in our lifetimes. For example, the last time this happened was about 80 years ago, just after World War II. Up until then, the British Empire was the world's leading superpower, and the British pound was the world's reserve currency. The UK had accumulated huge debts during World War I to fund the war, and the pound started losing value as a result. They began printing even more money to stimulate the economy. However, that slowly led to a huge devaluation of the pound, and eventually the US dollar became the new reserve currency of the world because it was stronger and more stable. This was the start of the US's global dominance. Therefore, if the US defaulted on their debt, it would be the end of the US's role as the world's leading superpower, just as the US took over from the UK almost 100 years ago. Therefore, world leaders never choose to default for this exact reason. This means they need another way to pay off their debt, and a government only has 4 more ways to get money. They either reduce spending, raise taxes, borrow it, or print it. Now, reducing spending sounds fine, but this would mean less healthcare, less social security, less military control, and much more, which hurts everyday consumers like you and me, as well as the country itself, as their control over the globe would shrink. Then we have raising taxes. The problem with raising taxes is it makes political parties less attractive to voters, so it's often more of a last resort. It also isn't an overnight process, and so takes time and effort. But then we have borrowing money and printing money. These are extremely attractive because they generate money almost instantly, and it doesn't make the political party look bad. And we can see the projected growth of US debt is only expected to rise over time. However, this cycle of using debt to pay off existing debt is extremely harmful. For example, after Japan's real estate and stock market bubble burst in the early 1990s, the government significantly increased borrowing to stimulate the economy. Japan's debt to GDP ratio climbed dramatically, eventually surpassing 200% in the following decades. Despite printing huge amounts of money to stimulate the economy, Japan faced over 20 years of minimal economic growth. This prolonged period of stagnation is now known as the lost decades and shows more dangers that too much debt can bring. So if the US does not increase its earnings relative to its debt, then eventually it's likely the government will be forced to raise taxes and cut spending. A similar situation happened in the early 2010s in Greece. They implemented harsh spending cuts and higher taxes to respond to their debt crisis. This caused huge public protests, unemployment soared to 28%, and their economy shrank by 25%. For context, if if the US economy shrank by 25%, it would be almost level with the Chinese economy. But how likely is this to really happen, and what opportunities does this actually present? Well, the good news is that the US has a lot of tools to manage its debt in the short term, so this likely isn't going to be a catastrophic issue for a while. In fact, the debt to GDP ratio is expected to rise to 150% by 2048, which is over 2 decades away. But understanding this long-term outlook helps us to frame what might be important in the short term. For example, during World War II, the US faced a similar situation when debt rose to 120% of GDP, which is similar to where we're at today. However, by the 1950s, the debt had stabilized due to the post-war boom. And this highlights where I see the opportunity moving forward. So let's take a step back and start with a question. What's the simplest way for the US to keep up on or reduce their debt? Well, it's for them to make more money than they spend/borrow. In other words, for their debt to GDP ratio to decline. Now, during that post-war boom after World War II, the US economy more than tripled from 1945 to 1970. And so to get out of this massive debt problem, the US will most likely need a massive economic boom. The most recent historical boom like this was in the early 2000s, when computing technology caused a massive boost in productivity, with companies like Amazon and Google adding trillions to the economy for the following decades. So the big question we need to ask is there anything that could cause a massive productivity boom in the near future for the US? Well, big growth comes from big changes, and what could be a bigger change than AI? From automating complex tasks to boosting productivity, AI has the potential to drive the most significant productivity boost in history. In fact, according to a 2018 McKinsey report, AI could contribute up to $13 trillion to the global GDP by 2030, and it could be even higher than that. And due to the US being the current superpower that it is, it's primed to take the most advantage of this. However, it faces harsh competition. The question isn't just whether AI will drive significant growth though, but whether the US will maintain its lead in this sector. I believe the answer to this will play a key role in the fate of the US economy long term, especially if China gains a lead on AI technology. This could be the seed for the US's long-term fall from global dominance. However, from a short-term investment/trading standpoint, this means that AI will only become a more important sector to watch. I know that AI stocks have been booming over the last couple of years, but I still see so much more potential, especially in surrounding industries where AI is only just beginning to make an impact. If you're interested in a full breakdown on AI opportunities, check out my next video. Anyway, thank you for watching. Press the notification bell to be the first to watch our update videos. Have an amazing rest of your day, and I'll see you soon.